Hello traders. Today I am showing you my best 6 bullish candlestick patterns. Bullish patterns may form after a market downtrend and signal a reversal of price movement. They are an indicator for traders to consider opening a long position to profit from any upward trajectory. So let's start. First candlestick pattern is hammer. The hammer candlestick pattern is formed of a short body with a long lower wick and is found at the bottom of a downward trend. A hammer shows that although there were selling pressures during the day, ultimately a strong buying pressure drove the price back up. The color of the body can vary, but green hammers indicate a stronger bull market than red hammers. The second candlestick pattern is inverse hammer. A similarly bullish pattern is the inverted hammer. The only difference being that the upper wick is long, while the lower wick is short. It indicates a buying pressure, followed by a selling pressure that was not strong enough to drive the market price down. The inverse hammer suggests that buyers will soon have control of the market. The third candlestick pattern is bullish engulfing. The bullish engulfing pattern is formed of two candlesticks. The first candle is a short red body that is completely engulfed by a larger green candle. Though the second day opens lower than the first, the bullish market pushes the price up, culminating in an obvious win for buyers. The fourth candlestick pattern is piercing line. The piercing line is also a two-stick pattern, made up of a long red candle, followed by a long green candle. There is usually a significant gap down between the first candlestick's closing price and the green candlestick's opening. It indicates a strong buying pressure, as the price is pushed up to or above the mid-price of the previous day. The fifth candlestick pattern is morning star. The morning star candlestick pattern is considered a sign of hope in a bleak market downtrend. It is a three-stick pattern, one short-bodied candle between a long red and a long green. Traditionally, the star will have no overlap with the longer bodies, as the market gaps both on open and close. It signals that the selling pressure of the first day is subsiding, and a bull market is on the horizon. And the last sixth candlestick pattern is three white soldiers. The three white soldiers pattern occurs over 3 days. It consists of consecutive long green, or white, candles with small wicks, which open and close progressively higher than the previous day. It is a very strong bullish signal that occurs after a downtrend, and shows a steady advance of buying pressure. So these are my favorite bullish candlestick pattern. What you think about it? If you like my videos, don't forget to subscribe my YouTube channel. It can help me generate more videos. Thank you.